Dayton, Ohio is starting to see occupancy get back into healthy territory, but as usual, we're seeing very little rent growth across the product spectrum. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Dayton update. And let's get into it, starting with occupancy rates. Take a look at this chart. You see some pretty good occupancy growth. Dayton is one of the few markets that had occupancy in weak shape even prior to the national recession in 2008 and 2009. And you can see occupancy rates were around 91% even back in 2007 and early 2008 prior to the downturn. And that's because recession came early in Dayton, as we'll show you in a bit. So occupancy got as low as around 89%, but now the market is back up to 94.8%, the highest rate seen here in quite a long time. And among the four largest markets in Ohio, Dayton is now ahead of nearby Cincinnati, where occupancy is at 94.3%, but still well behind Cleveland and Columbus, where occupancy is approaching 96%. Let's talk a little about the economy. Take a look at this chart showing annual employment change over the past 11 years, and you can see that since the year 2000, year-over-year job change has been negative or essentially flat in every single quarter until we got to 2011. And as of 3Q11, Dayton is up 1,400 jobs, and perhaps that's helping occupancy a good bit. And looking at job change by industry, we were seeing some modest improvement in that key manufacturing sector, but that has eased, and now it's the various service categories that are fueling the growth. And of course, here's the buzzkill for you. Dayton is still down about 62,300 jobs from the level seen in 2000, and that means the employment base has contracted 14% since that time. And when your economy remains that weak, it's understandably difficult to justify meaningful rent growth, even with improving occupancy rates. Same-store rental rates improved only 1.3% in the year ending September 2011. That is 3 percentage points below the U.S. average and one of the weakest growth rates in the country and dead last among Ohio markets. You can see Columbus at 4.1%, Cleveland at 3.3%, and Cincy at 2.7%. And let's wrap it up with a look at a key submarket. South Dayton really reflects what's happening in this metro overall. Strong occupancy, 96%, best in the metro, up 2 points year over year, but rent growth of just 1% in the past 12 months. Looking ahead to 2012, it may be difficult for Dayton to continue to see good occupancy progress. Even though job change is now in positive territory again, the pace of growth is mild and the hole remains very deep, and that's going to make it challenging for this market to see meaningful revenue growth. And that wraps us up for Dayton, so until next time for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.